Hey, Adrian. Thank you for joining us. We will begin at 6:05 p.m. sharp, just to give a few minutes extra for people to start logging in.
No worries, my friend.
Hey, Fuad. How's it going?
Assalamu alaikum, Nabil. Sorry, I was muted.
No worries, brother. How's your weekend going?
It's going.
Anything fun or just been hanging out?
Just home, basically.
See. We'll give it 2, 3 more minutes. Mahi, what's going on, brother?
What's up, brother? How are you?
I'm good, man. How was your gym session?
It was good. It was good. We actually left like an hour ago, grabbed some food. So now we're just chilling.
Okay, all right, all right. What would you hit today?
Just cardio and sauna.
That's good. After this webinar, I'm gonna go on my Sunday walk. I gotta get some vitamin D.
There you go.
Yeah. Assalamu alaikum, brother Rashidul. Oh, brother Rashid.
Assalamu alaikum.
How's everything?
Alhamdulillah.
Thank you for joining us.
You're welcome.
So, guys, just 2 more minutes at 6:05. Well, 1 more minute now at 6:05 sharp. We will go ahead and begin. Thanks for turning on your webcam, brother. Nice to see another face.
You want? It's a little bit dark.
That's okay.
I would turn my camera on, but it won't let me. I'm on Google, so it's saying the camera is not accessing. But I would. I understand it, but I'm sorry.
No, no worries. No, it is okay.
Okay.
These are all the total people, or you have more.
There might be additional people that join. We have a good amount of RSVPs, but people kind of do their own thing, join in their own time. All right, let's go ahead and begin. I want to start by thanking everyone for joining. I know it's Sunday. You guys all got family, friends, plans,
Shopping.
business to attend, shopping. There you go. So we are going to go ahead, Brother Fasi, if you want to, take it away and kind of go over
Absolutely.
what we're going to be discussing today.
All right. So, Jazakallah khair, and thank you everybody for joining us today. And a very interesting topic of a lot of interest to a lot of people's, investor due diligence, and how an investor can understand different funds, and how we can essentially see what are the key points, the key things that someone should be looking at, whether investing particularly in any Fajr Fund or any other real estate investment. So just want to quickly start. We see a lot of stories of people investing in different places, seeing how things one way or the other have turned sour or turned sideways. So we definitely want to talk about that as well, see and talk about the red flags, talk about how to vet a particular deal, and maybe as an example today we'll take what Nabil and these folks here at Fajr Fund are doing, to give us some details, ask some questions, and feel free to use this webinar, keep it as engaging as possible, and ask questions as we go along. So that being said, so maybe Nabil, can you give us some details in terms of what do you see like typical investors asking you about when it comes to investing in real estate?
So, it depends on the experience level, but the consensus of what's commonly asked is what are the safety nets, right? What makes this a good or a safe investment? And if you understand investing in general or real estate investing, you'll understand that it is one of the safer vehicles. But it's important to also know that, who is managing, who is facilitating, who is handling the transaction in itself is the key indicator of what makes or breaks a good deal. There are so many situations that I've seen where either people have invested and they've invested through someone else's guidance, or maybe even another broker or realtor sold them an investment deal, but after selling it they kind of completely stepped away from the equation. And in those kind of situations, without having professional guidance, professional experience, or at least some good advice when things don't go according to plan, those are the things that really take the good taste away from investing in real estate. So I think having a team and having professional leadership makes a key difference.
What's your thought on essentially the operators of the fund having, or as what we like to say, skin in the game, right? And how do investors understand that whether a particular person, let's say an active person who is actually on the ground, has skin in the game? What do you have to say about that? And how are you guys having skin in the game when it comes to Fajr Fund?
Absolutely. I think that's a very good point that you brought up, brother. The way I look at it is that when I'm trusting someone, the question here should be, how do I know that they want what's best for me? Okay. And a clear answer to that is for them to have skin in the game. They win with me, they lose with me. They're also not only investing their time, but they're investing their own resources. And when I see investment opportunities with skin in their game, skin in the game, with people who are doubling down not only with time, effort, energy, and skill set, but their own capital as well, that increases my confidence, because I know without a doubt that our interests are aligned. And I think that's super important. The black and white answer is that you need to have confidence that your interests are aligned, and skin in the game is a huge and easy way to identify that your interests are aligned. In regards to kind of what we're doing with the Fajr Fund, alhamdulillah, the people that are in the management side are investing. Between the actual management side, we have a total of $350,000 being invested into the Fajr Fund between me, the construction manager, the acquisition manager, our leadership and vision strategy manager, alhamdulillah, every one of our key team members that are going to be a decision maker, that are basically guiding us to a successful end, are invested with us. And that makes a huge difference. That gives me confidence that the people that are with me are going to do their absolute best, and I hope that investors see it the same way.
Mhm. So now that we understood the skin in the game, but if we are all in the same boat, it means that if we fail, we all fail together. If we win, we win together. Um, then the question arises: how do we make sure that we are winning, or we are partnering with the winning team, right? So the question there is like, what is the track record of these folks? Like, you might have skin in the game, right? But if you don't have a track record to explain that this system, this investment that you guys are doing has produced results. So I think the second thing that comes down to is, what's the track record? So what do you have to say on that?
Absolutely. I think track record is important. Not only, of course, does that highlight their experience, but it shows that this strategy, this investment, whatever is being proposed, actually and truthfully works.
Mhm.
What I can do is, just to kind of show you more than just tell you,
Yeah.
is I'm going to quickly show some investment deals that we've done over the years. Let me see. Let me pop it up. And you know what? I won't even say over the years, between 2024 to now. This is what I have already been doing. This is what is currently being worked on.
Um,
Let me see.
We can see anything.
Yep, I'm sharing it right now. So this is an example of a past track record or some level of experience showing that, one, the investment strategy makes sense and that there's proof of the concept working, and also the people that you're entrusting your capital with, the people that you're investing with, are more than just salespeople, more than people who are just taking your money, but people who have actually done it. The only thing different about what's going on here on this spreadsheet versus what we're doing with the Fajr Fund is that a lot of these clients, you'll see 16830 Mansfield, 17924 McKay, 6771 Cadillac, 18025 Main Street. These are investment projects that went successful. These are projects that investors have bought through our company, that have been managed through our company, and we've exited from. The only difference of what's changing is that instead of John investing into the Mansfield property, now John is going to invest into the Fajr Fund, which is doing Mansfield, McKay, Cadillac, Main Street, Woodruff. So what we're doing is basically taking our already existing business and just adding another level to it. We're turning real estate investing into a real estate investment fund. And alhamdulillah, we've been doing this for the last, or personally, I've been in real estate for the last 9 years. I've been heavily focused on investments for the last 2 years. I've invested along the last 6-7 years. I have a rental portfolio myself. We have an in-house construction team that we've built out for the purpose of making and streamlining our process. So, this is an example of someone with real experience, and it doesn't matter if you're investing with us or you're investing with another company. At the end of the day, if they don't have this track record, this experience to show you, ask even more questions than you would have, you were planning on asking to start with.
Awesome. So we covered the skin in the game. We covered, the expertise, the track record that somebody needs to have, and I see that you guys have that. And so this covered sort of the general aspects of one who would look from afar. But really, there's a couple of questions that I think we do plan to share these as a questionnaire with the attendees here. That's going to help anybody essentially invest in any future type of funds or real estate syndications that they might find useful for. The next thing is essentially understanding it through example and seeing like a deal by deal analysis. Can you walk us through maybe just one of these deals, right? Obviously, we see the numbers, we understand it, but really walking us through the end-to-end process of the how each property is sourced, who's going to do what, that's going to help us understand at a granular level. So as investors, it's important to not only just see it from afar, but also look at these examples in granular detail and understand the steps involved. And the reason we want to do that in operations is to say that if in case there are some risks which we will be talking about, they come in the forefront of that happen, let's say some global events or anything, we are prepared for it. We know the next steps that come along with the process, and that's gonna help us in understanding that, okay, things are moving in the right direction and not towards the worst, which we will talk about red flags in a bit. But let's can you walk us through maybe one or two of these deals so the audience can understand, like, okay, these are all the steps that it goes through from sourcing, acquisition, construction, renting, and flipping.
Absolutely. So what I'm gonna do basically, guys, the first thing is I want to show you guys the property itself. And let me type it up. All right. So to start with, the screen that I'm on now, this is something that I have access to. It's called RCO3. This is something that all realtors will have access to. This is where, when we decide to list a property, may it be for sale, may it be for rent, it will end up on the MLS. Other than the circumstance that we happen to have an off-market buyer or something along that line, this is the database that most investors are looking. The first property that was on our list here, all right, you can see is 16830 Mansfield. There's a purchase cost of $42,000. There's a rehab cost of $38,369. The total investment amount, the exit value, and then the profit that we ended up, actually having. All right, I'm going to show you guys how we kind of came to these numbers. All right, so first things first, I'm going to type in here. I'm going to show you guys the property address. All right, once the search is entered, you can see all the listing tickets ever done. This is a listing ticket from our company, Amin Realty. As you can see, we've assigned it to one of our agents. His name was Ahmed Zamzam, and they put me as a co-list agent. When I'm added as a co-list agent, the purpose of it is for me to be able to monitor the communication, the inquiries, the traffic, and basically have a firsthand boots on the ground view of everything that's going on. As you guys can see here, the listing price was $119,900. We sold at $121,500. One thing to mention is that we have a concession of $2,500. All right. When I go to public record, this will basically show you guys the sales history, and you guys will see the sales price that was recorded is $22,500, but we put $42,000 as the actual acquisition cost. There was about $2,000 in closing costs in itself, and there was about $18,000 total that the investor ended up paying on top of the purchase price, basically because it was a wholesale transaction. Now we're going to be able to explain and walk you guys through how a wholesale transaction works over time. If you guys have questions, please do let us know. We'll be able to explain that further. But the point is that we ended up purchasing and spending about $42,000 to acquire the property. We sold it for $121,500. Now, this renovation cost, how is it as a company that we're keeping track of what each project cost, where the money is going, all that good stuff? I'm going to pull up, let me find it. So this here is a renovation tracker that is something our company basically built on. It's an Excel. It allows us to track every penny coming in for the property, going out for the property, and every investment deal that we do through our company is going to have a renovation tracker similar to this, and maybe even something a little bit more robust. We're in talks with the company of possibly getting a construction management software. So if so, that might be even a more automated way of doing things. But let's just say we're talking about exactly how the company is operating now. This renovation tracker, you guys will see as a property address there, so we know what property address we're focused on, what the original estimated renovation cost was, how much we actually ended up spending. You guys can see that there are different amounts here, payment to contractors. Sometimes if you're hiring a general contractor who's doing multiple things, we just put specifically payment to contractor, and then we're paying them lump sum amounts depending on the progress of the work. You guys can see that, we're also monitoring the dates that things are being done and completed. And just to kind of show you guys, the last payment date, the first payment date was 7/09/2024. The last payment date was 10/8/2024. So this project took just about exactly 3 months to complete A to Z. Now you'll see some things, for example, we hired a different roofer, ended up getting a different person for the roof, so we paid that separately. The first contractor was different from this contractor that finished the project. You can see we ended up writing out exactly which construction company we were paying. You see payment to Newman Construction. You can see payment to landscaper. There was some material that was ordered on Amazon. There was a few DTE bills. We had a different person for carpet. The dates that payments came in for the renovation in itself. This is something when we're working with a direct client that it matters. Of course, with the Fajr Fund, we're going to already have it. But that's basically how we determined and monitored our renovation cost. We have an estimate or a budget that we're in mind. Starting with $39K is what the client was given as the invoice amount. We ended up spending $38,369. So those are the two costs that we're primarily focused on. It's the purchase price, it's the construction cost, and then the ARV or the sales price is how we determine what our actual net profit was. So just to kind of go back, guys, where is that screen? So you guys can see 42,000. The rehab cost was 38,369, like our tracker mentioned. Exit value 121,500. So what we've basically done is take 121,500 times 0.92, 117 minus 80,000. I should probably be showing you guys this on, you know what, let's do this. I'm gonna pull out my calculator.
And as investors, it's important to do independent verification of these numbers as well. We have done it, and when we look at ARV numbers, it's mainly focused on getting those from MLS. It's pretty easy. Take the address, check it on MLS, check it on any Zillow, Redfin, to get comps and see if what we're mentioning is correct. And I think it's part of what, as investors, irrespective of who presents it out, to independently verify as well.
Absolutely. So I'm gonna this is the Excel that we use when we're basically analyzing deals. You guys can see here at the bottom, there's a rental tab, there's a flip tab. And basically this is to kind of give us a very accurate estimate of what we as an investment company can expect to net on this transaction. So we're going to use the actual numbers from our deal. Okay. So the after repair value, what we sold for was 121,500. The actual, one second. The actual total amount invested, $80,369. We're going to put that in here. Okay. So there was a concession. So instead, I'm going to change this label to concession just to kind of show you guys. But the concession was $2,500 that we ended up paying. Closing costs when we bought, this was already factored into our total rehab price. So I'm going to change that to 0 just for the sake of our numbers. We're going to leave this alone. This holding cost, property taxes, it's contingent upon the property in itself. but especially at the purchase price that we bought it, it would be no more than $100 a month. $100 in utilities is reasonable. $100 in insurance, that's pretty reasonable. This commission is 6% of that closing cost. We, as the Fajr Fund, will end up hiring Amin Realty and its agents to end up selling the property. So we are going to be paying our agent 3%. We're also paying the buyer's agent 3%. So that's where this 6% goes. Again, when you're selling, you have additional closing cost. This is $2,430. You guys can see that based on this, the net amount is $27,100 as the estimated net profit. What we've got here, just to go back to the screen, is $28,911. So the adjustments are probably in the holding cost in itself. Basically, some of those costs change, but overall, you can see that the true net profit is very close to exactly what we anticipated when we calculated or when we decided to purchase this investment. Any questions on this process itself?
Yeah, so that spreadsheet that I'm seeing, this is
Yeah.
included in Fajr Fund?
No, these are deals and case study from properties that I have done privately for clients since 2024 till now. None of these are related to Fajr Fund particularly, but these are examples of what we will be doing with your guys' money. It's to highlight that we have actually had success buying, fixing, flipping, and selling. We have had success buying, fixing, renting. So what we're doing individually for investors is what we're going to be doing for the Fajr Fund while also being your partner.
Understood.
So Nabil, Fajr Fund basically is all cash deals.
The nature of the Fajr Fund itself is, yes, absolutely no debt. We are going to be doing cash on cash business. And I think this is the most lucrative way of investing, especially with the strategy and model we've chosen, because when you're buying cash, you're saving money because you're able to negotiate harder. You're able to negotiate a little bit more, and more than that, our holding cost. As you guys can see, this investment took almost 6 months versus financing, which would require us to have a monthly mortgage payment that'll eat away from our profits. You're a little bit more lucrative by doing cash investments.
Awesome. Thank you, Nabil, for providing these details. We covered, essentially who at Fajr Fund is working, who has the skin in the game, what's their track record. We talked about how you do the deals, which is essentially explaining the deal that you just went through and how we're able to make that profit numbers that we are talking about.
Yes.
I think the third section, as investors, we would want to know is what is the structure of Fajr Fund, how are the profits split, and what's the strategy and what's the term of Fajr Fund, and sort of explaining that whole process in Fajr Fund. You've explained how you do individual deals. What makes Fajr Fund different? What is the structure behind Fajr Fund?
Absolutely. So the Fajr Fund is basically a profit sharing model. All right. And this profit is being shared 65-35 for investors who are investing between $50,000 to $150,000.
So you're saying the ROI number that I see there, the $29,911 are split between the Fajr Fund active partners and the passive partners who are the investors.
Yes, that is the net profit that's being split. So
And that's 65-35. Okay.
Correct. 65-35. And when you're investing into the Fajr Fund, you're not investing in one particular deal. You're investing into the overall success. So what that translates to is that you will have ownership in every investment property that we buy as a company. So
Why do we want to do that, and why not individual deals?
good question. So to give you a very simple answer, if you were to invest $100,000 and everything went well on that $100,000, let's just say you made 20% on that. You made 120, you turned 100,000 to 120,000. it would be the same amount of profit if you were to invest $100,000 into the Fajr Fund and make 20% return. So the potential profits are the same that you would get investing directly or singularly into one property versus 10 properties and having your 100,000 divided over the 10 properties. But what you're truly getting is a safety. And what I mean by that is, let's say in a scenario where that $100,000 invested into one property unfortunately has issues and circumstances that were not foreseen. Let's just say that there was a plumbing issue that was $10,000 that you'd never anticipated for. That could cut your potential $20,000 profit down all the way to $10,000. You made now 50% of what you were anticipating. And 50% of what you were anticipating still, it's not bad. I mean, okay, all right, I made a mistake. I still made $10,000 though. But being in this industry for as long as I have seen people go from a potential $20,000 profit to a potential $10,000 loss. And that's where investing in the Fajr Fund is a better alternative, because God forbid these issues, at the end of the day, if there's anyone telling any investor that there's absolutely no risk, that person cannot be trusted. That's my opinion. But what you get when investing into the Fajr Fund is that since your $100,000 investment is spread over 10 properties, God forbid one or two properties don't go according to plan. Well, instead of making $20,000, you were anticipating you're probably making 17, 18, 16,000 because your money is spread out. So the terminology that we like to use is to tell investors that the potential profits are just as lucrative as for you to invest yourself, but at least when you invest in the Fajr Fund, you dilute the risk. Does that make sense?
That does make sense. Any questions from any of the attendees here on this topic? Okay. Speaking of diluting risks, right?
Yes.
What risks are involved here, right? Can you give us a contrast between doing it as an individual investor, right? You said, one plumbing job, your profits are just one extra plumbing job away from being lost. I would say that, right? How can you explain the risks involved at Fajr Fund? What are the risks that an investor is potentially opening himself to here? And if you can explain that, that would be really helpful.
Absolutely. So before I say all the risks, I want to say what you possibly aren't at risk of, okay? And that's liability. That's the number one thing. When you invest into the Fajr Fund, you become a limited partner, and the protections, God forbid, when things go wrong, or you to invest yourself, let's say someone slips and falls on your property and they sue you, that could be detrimental. Well, when you invest in the Fajr Fund, there's zero risk of that. You as an individual can never be sued. You are not liable for anything that happens. So that's number one on a pro side. Okay. And I say that first just to let you guys know what you're not at risk of, but there is still risk when it comes to investing. When you're investing, it doesn't matter if it's the Fajr Fund or a different investment company, especially when it comes to real estate funds, you are subject to market change. So it's a possibility that the appreciation that we've anticipated or the profits that we're anticipating because of, the market growth, maybe you're not going to get those levels of profit because there was a market shift or, economical swing, or even maybe the season changed, right? So there are some factors that are beyond our control, which is the market in itself. Number two, the reality is that there are risks of mismanagement, right? Fortunately, we have a very professional structure where it's not reliant on one person. But at the end of the day, it could be that we planned, let's say, a $40,000 rehab, and unfortunately, the rehab went, well above. It went to 50,000. It went 20% higher. So now the potential profits, are gone. Or it could be that now on a deal where we thought we were going to make money, we're going to lose money. But overall, my opinion is that when you're investing in a 100% backed real estate fund, the risks are very minimal. Just to give you guys an example of what I mean by that, let's say right now, we've talked about the selling costs it costs about 8% to sell property, right? $100,000 house between commissions and closing cost will cost you $8,000. Assuming that property values have not gone up at all, and we invest $100,000 into a turnkey investment, and we sell 6 months down the line for $100,000, what is our loss at an 8% closing cost? That means that $100,000 we exited from has turned to $92,000. And I say it in this fashion to show you guys that the risk here really is very minimal, and the strategy that we've chosen of buying properties, through various sources, off market, auctions, wholesalers, particularly selecting the best of the best properties on market, also creating appreciation by doing the rehabs ourselves, it hopefully will mitigate that concern. Even if things don't go according to plan, even if there's a market change, we still as a company should have a significant buffer. But in reality, there is a potential for loss.
So, Nabil, I know you mentioned the word wholesale a couple of times here. Perhaps a lot of our viewers are not familiar with the term in terms of what is wholesale. Because as investors, we understand we find property on MLS and we buy them. But when you say wholesale, what do you mean by that?
When we say wholesale, the nature of what a wholesale transaction is are people who are in the real estate industry. They don't necessarily need to be an agent, but there's someone that has connected with a seller through whatever way. It could be bandit signs, it could be cold calling, it could be mailer campaigns, it could be door knocking. But they have gotten a contract with that seller for them to either potentially buy that investment themselves or sell that contract to another investor. And the nature, usually when these wholesalers approach a seller, is that, hey, Mr. Seller, we're offering you a quick cash transaction. We're going to pay your closing cost. We're going to basically close at your terms. We're ready to close now if it's available. And they're offering quick cash to usually sellers that get them to agree to prices that are generally below the market value. So as a
Why
scenario,
would anyone agree to a price lower than what the market value is?
it could be that their home is distressed. It could be that they don't really want to go through the hurdles of putting it on the market and finding a realtor and getting photography done and people coming in and out of their house. It could be as simple as, they got someone who called their phone and told them 80,000. They bought it for 40,000 10 years ago, and 80,000 seems like a great number. The reality is that even though it's not market value, technically, to them, that was a very good offer. To them, in their scenario, their circumstance, that offer made sense. It's like, for example, sometimes people go to a pawn shop and they might sell, their cell phone because they don't need that cell phone anymore. They've upgraded, or they need the cash because they need to pay their light bill. So everyone has different circumstances.
Sounds good. So just coming back to what Fajr Fund is doing. So we I think covered the acquisition parts of what Fajr Fund is doing. We covered the regulatory part where you say that investors are limited partners into the fund. They're protected from the downsides, and their essentially investment is spread out through couple of multiple properties, eventually reducing the risk involved with a few bad apples that you might fall into, which is a possible scenario, which always everybody has to be ready for. Could you explain us the once you have acquired the property, what's the process? Because you have acquired this property from a wholesaler, right? And perhaps I'm understanding you would go through the construction phase, and then obviously the last part would be the dispatch, or I should say, renting or flipping part of it. Could you give us who will be doing that and how Fajr Fund wants to do that?
Absolutely. So, I'm going to even start before we acquire the fund. So that way you guys get the full picture. The way we do this, number one, is we have a dedicated acquisition manager. His name is MD. I think he was in, MD, are you there? Say hello.
Yes, brother. Hey.
All right. So MD, he is our first line of defense. All right. MD gets many calls, text, emails, messages for different investment properties. And what he first will do is look at the property in person himself. Before he even goes, he's going to analyze it on paper, make sure that the numbers look good on paper. We have an investment calculator and that spreadsheet that he has both access to, that he uses both to analyze the deal. Then he'll go visit the property. He'll get video recordings of these investments. He'll look at all the good, the bad, the ugly. If we see something that has like a major structural issue, or if we see something that's probably an abnormality, something that we don't feel comfortable rehabbing, he'll let me know right away. And that's it. We say no to the deal. But if, let's say, it passes the preliminary, key determination points of it being a possible good deal, he'll then submit that deal to me with not only the purchase price, a potential estimate for the rehab. Usually it's a ballpark estimate that we're even overestimating on. He'll say, something like, hey, Brother Nabil, this is going to be probably 40 to 50K. And he has that level of experience where he can give a general ballpark estimate, because not only has he invested with me, with me as my partner, he's worked on so many of these transactions, visited these properties, but he's an investor himself. Then he'll also provide me the comps for the property. That's something that, he has access to RCO3 MLS. He'll look at all the comps and then he'll send it to me in a nice email, or if we're on the go, he'll send it on WhatsApp, where it gives me purchase price, it gives me potential rehab cost, and the potential ARV. After that, it is my job to tell MD why he's wrong, why the purchase price is maybe too high, or the rehab cost is maybe, underestimated, or maybe the fact that he estimated the ARV to be too high. We basically have 2 checkpoints. And then, assuming that not only does he approve, but I also approve the deal, at that point, before even moving forward on a transaction, we send our construction manager. And his job is to actually get a real estimate. Now, that's done sometimes either before we've gone under contract on the deal or during the due diligence period with our contract. So now we have a third checkpoint where individual who has the professional experience and project management skills of the construction side gives us a real estimate. That estimate is what we're basing our, construction decision off of, and the deal in itself. Between you guys and I, even if the project manager, the construction manager says it's $40,000, we tend to add mentally, as well as we tend to keep a 10% buffer.
Nabil, let me ask you this question. Why need investors then when you have partners like MD to invest with you?
So we want to do this on a bigger scale, and we want to also involve the community. There are many people who are not in the real estate field that want opportunities like this. So this is a way for people to get involved, for us to help give back and grow the community, but also do it on a bigger level. Me and MD, we can maybe do 2 deals, 3 deals a year together, but with the power and support of all of us, the goal is where we can do 20, 30 investment deals together. And, it just potentially increases the probability of success, more and more. Compared to doing 2, we're doing 20. So to go back to the checkpoints, then the contractor, the construction manager will give us the bid, and then we will base our decision to buy it. Once we've actually bought that property, we're having a weekly check where, the construction manager will go to the property. He'll provide video updates. He'll make sure that, the construction is moving along in the right direction. We have, of course, a timeline. If we're delayed, we're constantly checking in to make sure what's causing the delay. Is it going to continue to be a problem? We're adjusting for, maybe, manpower. Maybe we're adjusting for the season, the weather, whatever the case is. We're analyzing the construction on a weekly basis to meet the actual deadline. Once we've met the deadline and we're market ready, at that point, we basically use our in-house brokerage, realty, and we'll assign a dedicated agent to handle that listing. If we decide that this is a property that we want to keep, again, same way, we're going to hire and get a dedicated leasing agent and pass it on to Omni property managers to handle the management side.
Awesome. And so once you acquire the property, the construction is done. The plan under Fajr Fund is to sell them or to keep them?
So very good question. We are planning to primarily focus on flip investments for the first 18 months. We will potentially build some of the rental portfolio along that way, but the overall goal is to do fix and flips and rentals. The following 18 months is to take profits from the flips as well as the initial capital that we've fundraised and to reinvest that into the strategy of buying, fixing, and then renting. The end goal is to just have a wonderful debt-free cash flowing portfolio, giving our investors amazing returns. To be very truthful, the flips that we're doing, the purpose of that is to raise the investor's share value. That's it. Simply, we just want to make you guys more money.
Awesome. You talked about a lot of things. One of the things that you find is having checks and balances in any form of investment. What sort of auditing methods or accounting measures are taken by Fajr Fund, A, to make sure they are doing things on timeline, and B, on a strict budget? So what is the accounting methodology when it comes to tracking, being on time, and being under budget for your project? So who's going to do that? Do you have an independent third party doing it?
So we do have an independent third party that's doing basically all of our bookkeeping, all of the monitoring of finances. And when it comes to the accountability of being within budget, that is basically an internal team member from the Omni property manager side. That's our internal construction manager who's estimating it, and even when we're estimating it, we do keep a buffer because in reality, it would be wrong for me to tell you guys things always go according to plan. That's
So
usually
what
never
is the level of visibility as investors we are going to have when it comes to these things? Are we as investors going to be the accountable persons when we get access to these things?
You guys will also get access. We are SEC regulated. So the SEC has a very strict guideline on us being very compliant and detail oriented when it comes to all of our accounting, all of our finances. And then, for those of you guys who are investing, you'll see in the PPM that we are required to basically give quarterly statements. So these are the ways that we not only are transparent with you guys, but you guys as investors can also, double, you guys can basically be our check and balance as well.
Should be.
Should be, exactly.
Okay. And so, go ahead. Was there a question?
I was going to say, do you happen to have a plan that the investors can actually evaluate before they actually get involved? And then do you have a return on investment? So based on, is there a minimum amount to get involved, percentage change, tiers? How does that work?
Absolutely. Very good question. So yes, there is a business plan. There is a full structure that is all part of our PPM documents. If someone is interested, I can send that. You'll see that it has many sections, of which one of those are the business plan itself. That's a breakdown of exactly what we plan to do with the money. Now, in regards to the minimum investment amount, it is $50,000, and the timeline, the lock period is 3 years. So when someone decides to invest, it's going to be for a 3-year investment. And the estimated return that we have now is 18 to 24% after the company splits. Again, we mentioned previously, but it's good to reiterate that we are a true partnership. You as an investor take 65% of all the profits on your capital. We as a company retain 35%. And just to mention that we do also include all of the Fajr Fund's operating cost to come from our 35%, not from the actual gross or from the overall net income. And the reason we do that is because we want you guys to net as much as possible, especially being that this is going to be our first fund. We want to impress the heck out of all of you guys. So hopefully that answers your questions.
Thank you. Yes, thank you.
No problem.
Continuing on what Adrian asked here in terms of how capital from investors moves in Fajr Fund. I think that's something we want clarity on as to when we, let's say, invest 100,000, how does it move through? Like, where does it go? How does it move? And where does it come back? Can you give us a glimpse on that from a foreign investor to understand, okay, my money went to maybe A, B, and C places, this is where it came out, and this is where we made the profit, and it came back to, let's say, my account, my share. Can you walk us through from the how the money flow happens?
The money flow is super important. I think everyone wants to know, where's my money going? So yes, once you invest into the Fajr
And how
Fund,
much visibility we will have of that?
absolutely. So we're number one to answer the visibility question. Our accounts, our statements will be provided to investors who've partnered with us on a monthly basis. We're also trying to find a way to have a portal. I know it's going to take a little bit of time, maybe some assistance from some developers, but a way where we can have a login portal for investors to come in and see exactly where each stage, each investment property is, how much has been allocated to that investment. Now, that's the goal. We're still not there, but at minimum, we will have renovation trackers and a case-by-case study to provide you guys on a monthly basis. But once you guys basically determine that you want to invest into the Fajr Fund, the funds will first go into an escrow account, which is with Detroit Metro Title Agency. From there, once the fund starts, the escrow funds will be moved into the Fajr Fund bank account. All right. Now, in the Fajr Fund, there will be three bank accounts or three accounts within that. One is going to be the capital, one will be a rental income account, and one will be a construction account. We're going to basically take the money from the original capital for acquisitions. Okay. So money that initially comes in will be utilized for purchases. Some of that money will be transferred to the rehab account depending on a per budget analysis. As an example, we buy a property for $50,000. We assume that the rehab is going to be $50,000. You'll see account $1 million. 50,000 went out for construction, the purchase. 50,000 was moved to the construction account. And then we also, add a 10% buffer. So actually $55,000 will be moved to the construction account. And from the construction account, we will allocate the money to the contractors that we're hiring. You guys will see, construction agreements. You guys will see, of course, the work in itself, all payments, receipts, checks, everything that's needed, we will provide and keep record of. But then the rental account is where the money from the rents will come into. So basically, this is kind of the flow of what's happening with your money. And now the question, when you sell a property or successfully exit one of those investments, where is that money going? It's going back into the first investment account where the original funds came from. Remember how we mentioned $1 million in one account? That's basically the capital raised. That's where the money will go back into. And this is how we're going to rinse, repeat, and create additional profits and equity for your guys' shares.
Awesome. I think the last part within that is the exit strategy for investors. How do investors exit and take their profits? What's the tax implications? Two things.
Yep. So as investors, basically on an annual basis, at the end of the calendar year, we are going to provide investors, actually, sorry, I don't want to say end of the calendar year, probably towards the beginning of the following calendar year, you guys will all, as investors, receive a K1 statement. Now, you will take that K1, go to your, CPA, your accountant, whoever you file taxes with, and utilize that on your taxes. And that is your only tax responsibility. Even though we will be profiting probably for years 1, 2, 3, we will be able to show you guys a paper loss. But realistically, that is your only tax responsibility. And then, Brother Fasi, can you remind me what the other part to your question was?
Is when do we cash in on our profits? It was basically when we cash in, what are the tax implications? You covered the tax implication parts that you will give us the K1s, and then you will give us the paper losses to offset some of our other incomes if we have to. However, can you talk about when we will actually make money in our hands?
So you will make money in your hands from two ways. One is the rental income. That is from the properties that we purchase, fix, and decide to hold. The rents that will come will be distributed to investors, again, on the same split. That is going to be on an annual basis for years 1, 2, and 3. We're estimating that we can probably get our investors 5 to 7%. It doesn't sound like a lot, but while we're building your share value, a 5 to 7% return that comes directly into your pocket. This is to show you guys that, hey, the fund is making profit and is successfully bringing me income. It's minimal, but you'll get that on an annual basis. Now, at the end of the 3 years, as an example, let's just say you invested $100,000, your shares went up about 15% per year or 15% per year. Your share value has now gone from $100,000 to $145,000. That $45,000 that was made, that's what's also being split 65-35 or 70-30. And then you will basically have to pay capital gains tax on the remaining profit that you actually got. So for $45,000, 70% of that or 65% of that, the investors will basically be paying capital gains on the $29,250 that they've made in profit.
Thank you. Thank you very
But
much.
you pay the taxes only if you withdraw the money, correct?
You will pay taxes basically you will basically pay capital gains taxes once you've sold your shares and pulled your capital out. Yes.
So
Any
as
other?
long as the shares, as long as you don't touch the shares, you have no responsibility for taxes, correct?
I mean, you haven't made the profit yet, so it's still, there's no capital gains on that.
Okay.
And if and I believe the Fajr Fund or the profits from the Fajr Fund are still eligible for a 1031 exchange. Would that be another way to look at it?
So we will possibly do 1031 exchanges. I've done further research, and the reality is that 1031 exchanges are meant for investments that you plan to hold. So for example, if we held a property for over 12 months, then we can absolutely do a 1031 exchange, and we will be utilizing that tax strategy to retain as much capital as possible.
What about as individuals? When we get a K1 with a profit and we take this actualize those profits and then reinvest within that first year, within the year, to another property, let's say outside of Fajr Fund or some other personal assets, would we still have that tax liability? I guess it's a question for CPA, but I'm
That
just
would be a better question for a CPA, but as long as it qualifies for the 1031 exchange, no, you will not be liable for that tax, for the capital gains at all. Now, the question is, does exiting from an investment fund to a new individual property qualify? That's a better question for a CPA.
sounds good. Sounds good. I think in terms of a due diligence perspective, we have covered pretty much all the questions that I had. Perhaps maybe the last 2 minutes I want to ask about, at the end of the day, it's an individual to individual business. And we have seen, many, if not many, I should say at least personally, that different funds have come up and gone south. What's your take on that? Why do you think certain funds that came up with similar ideas but sort of failed or had a bad taste in investors because they went south? What's your take on it? What makes Fajr Fund different from it? Obviously, the numbers, the questions, they've answered those, and profits are to be seen. But the question is like, why trust Nabil and Fajr Fund, whereas some others might have haven't gone through? Like maybe they changed their priorities. Maybe they didn't take it as seriously as they were talking about it. So what's your take on that? What would you do that would make Fajr Fund different?
Number one is the strategy in itself. It's very risk-free in the sense that we don't have financing or over leveraging. I think a lot of people go wrong with real estate funds where they anticipate for a very high return or tight timelines for new developments and things like that. And all the profits kind of get eaten up because of the financing involved. We don't have that risk, fortunately. That's number one. Number two is, this is my life's mission and passion. This is what I've been doing for the last 10 years. This is what I've dedicated my youth to. And at the end of the day, I'm investing my own capital. So to answer your question, my time, my energy, my commitment is with this, and this is my dream, and I don't want to let people down. And the reality is, majority of the people who are investing with us are very personal friends, family. So, to say the least, I'm going to respect the hell out of everyone's money.
Thank you for that, Nabil. And I think the key point that you mentioned is this is your passion. This is something that you are fully committed to, as you have mentioned earlier. And I think that's where a lot of these funds go south, is because somebody from another industry would come in and say that, yo, let's collect some money and go buy some houses because they've done maybe one or two deals before while they were in another industry and they were successful, and they think. The other thing is obviously investment of your time and passion. How about the other? Usually, the other thing that comes down to is sticking to timelines, right?
Yes.
Um, what extra measures, I should say, are you guys taking to sticking to these shorter timelines, as you have mentioned, within that 6 month cycles of flipping properties in order to make sure there's return in a timely fashion? Because
Yeah.
a lot of these funds, what I've seen is they extend out, and so the profits really at the ROI where you're talking about really sort of dwindles down as years fall through. So
Yeah.
what's your strategy to compact that timelines?
So most of these situations where people anticipate a 12-month timeline and it turns to 18 months is due to, truthfully, the lack of communication between internal teams as well as the commitment. Our internal teams, from the property management, from the construction management, from the brokerage side, is all under one roof.
So you're
This is
saying you're
where
more vertically integrated, which makes you unique from other types of funds. Is that correct?
I would absolutely agree with your choice of words. We are vertically integrated. We have these components that make us successful within our umbrella. We're not getting third parties or relying on outside relationships and sources to make sure our commitments are being met. This is all within our umbrella. And at the end of the day, being that we're all under one umbrella, we have no fingers to point. It is on us. So the fact that it's all on us, we're vertically integrated, and we're under one roof, literally and physically, it makes it so much easier. So I would even be confident to say there will be daily meetings, not even on a weekly basis, but daily, in the sense that we're constantly running into each other, seeing each other, getting updates. And more than that, we've strategically placed someone for that role of holding us accountable. We have someone, who's going to be basically overlooking all of our operations and being, the person who tells us when we're steering off the right course.
Awesome. All right, that's a wrap from my end. Any questions from anybody on the call here? I know a few people dropped out already, but thank you very much, Nabil, for giving us this in-depth understanding from an investor's perspective, what we need to be looking at, how you guys would be functioning, and really essentially making sure the risks, the profits, the accountability, all measures are taken into account. And then especially the last point you mentioned, the vertical integration, gives us the confidence that this is not like any other fund where we are hoping to find contractors, hoping to find wholesalers, hoping to find you know, property management company. Over here, you got Amin Realty to delegate things, to move things out. You got your cold callers and your team within Amin Realty who will get you the deals. You got MD on the ground, the boots on the ground, checking out properties constantly. You got the property management side of things with Brother Mushtaq, all within the same umbrella as you mentioned. So it gives us, at least for me, the confidence that you guys would do a great job. So thank you very much, Nabil. And any other questions, Brother Ford? Did you have anything?
I have a question. Um, You mentioned earlier, Nabil, you're doing like 2 to 3 flips a year with MD, correct?
Yes, we
Now,
have done, yes,
and
reflex.
also you said you know you might go up to 20. So how's that? I mean, that's a big jump. And how's that? Is that manageable between you and MD, or is that might require more people to get involved?
So as of right now, I think our infrastructure is more than sufficient to handle the growth of focusing on, and the example I was giving you is just something personally me and MD were doing, not even on a company level. As of right now, at this exact moment, we have, let me pull up 1 second. I'm going to show you guys actually, just really quickly. So this is kind of how we're managing construction and updating each other. You guys can see we have 3 properties that are in need and to begin, but we have 1, 2, 3, 4, 5, 6, 7, 8 properties under construction now. So to answer your question or hopefully show you that we have the bandwidth, we have the manpower, and we can absolutely do 20 flips. Now, if need be, and we see that we're in need of additional hands, we will hire and scout the best members to make sure that this project is successful. We're not afraid to grow if necessary when it comes to, the team members.
Thank you.
All right.
Awesome question there, on Fuad, on pointing out the scalability aspect, which is clearly an important aspect in making sure investors understand that who we are dealing with has the capability. And I think with the gold mine of Amin Realty, Omni Properties, there's enough hands that you can pull in if needed.
Absolutely.
All right, let me see any questions in the chat. Nope, I don't see anything there. So again, thank you
I
very
have
much.
one question.
Go ahead, Carla, go ahead.
I'm sorry, I jumped in really late, so I apologize if this was already asked and answered. Um, I hear you talking like, somebody invest $100,000 or something, but which would be way out of my league. Has it been said? What's the minimum amount to invest?
50,000 is the minimum investment amount.
Okay, thank you.
No problem. All right. I think that covered all the questions. I want to again thank you guys, Brother Fasi. Great questions. I love when you ask. You make me think harder than I plan to.
And no, I think you were pretty thorough with all your answers. So it's really giving us the confidence to continue with you. So thank you very much.
Thank you. Have a great day.
Thank you, brothers.
You guys, thank you. Have a nice rest of the weekend and take care. Bye.
You too. Bye.